Thank you. Hi, my name is J Pinkert. How's everyone doing today? I'm a trader coach at yourtradingroom.com. I typed the website up there. And I train our proprietary traders that are all in the running to trade the company's $3 million account. I train them to get to that level where they can keep 95% of the profits, and we cover the losses. And we also have regular memberships too. I'm in charge of swing trade programs at YTR, as well as the teaching and classroom sessions to teach people how to swing trade. Trades where we're looking for 50 to 200 pips, not the 5 to 10 pip type day trades. For me to get a feel for the crowd that we have today, how many have been to my webinars here at FX Street before? Can you give me a why if you've been here and you're familiar with my work and what I do? So 3 that have been here before. Frank, thanks. Okay. Hey, Rob, how are you? Good. Okay. Well, those that have been here before know that I think it's very important to pay attention to the dollar index contract when you're an FX trader. The reason is it would be like trading IBM and not following the Dow. If you trade Euro and not pay attention to the Dixie contract, can everyone see that clearly? That's your December Dixie contract. Okay. 2 weeks ago we were in this zone right here, and I talked about the potential of one more drive for a 3 drive to a top formation. Here was your first little pullback. This was a confirmed high. This is your highest RSI reading. We had a little pullback here, rallied to the second top up here, put in a lower RSI reading, but still some pretty good upside momentum. And then we had that one final push that was ignited by the sell-off in the S&Ps to new lows before they recovered. And this is a 3 drive to a top formation. I learned this as a commodity trader in the mid-70s. The author of this is J.R. Hill. And what else do we have at this high? If this is a confirmed high, this high did not confirm, new price high, lower RSI reading, and on the 3rd drive we had yet your second non-confirmation. Okay, so to me, a confirmed high, markets rarely top on a confirmed high, and they rarely bottom on a confirmed low. So anytime you have a confirmed high, of course, when you get overbought, you could expect a correction, but the implication of a confirmed high is there's another one to follow that may or may not be confirmed. This one was a new high, so the fact that we had a confirmed high, the implication that another high was coming manifested on this drive to the second top. Then we had another 2-day pullback, and on this 3rd drive, which I'm a big believer in the number 3, it's the number of completion. You see it throughout popular culture. People say the 3rd time's a charm. With the Major League Baseball playoffs, 3 strikes, you're out. If you're from Canada, of course, hockey's 3 periods, and everyone on the ice wants a hat trick, 3 goals. And even in the spiritual plane, it's the Holy Trinity. So the number 3 is the number of completion to me, and that's why there's harmony and rhythm to formations like this. And they also happen at lows. So if there's one thing you can learn today and glean from this, start looking into the 3 drive to a top, 3 drive to a bottom formation. You'll see these repeat in all time frames, and as far as it only happening in certain asset classes, here's my statement for that. A chart is a chart is a chart. So you could put dollar index here, you could put euro here, you could put soybeans here, you could put Intel here. The chart is traded the same. The only difference is the leverage and the different volatilities between different derivatives. Can I get some whys in the room that you understand that? Let's collaborate today. Okay, so that's history, right? No one cares about this anymore, right? So we have this break, right? And here we are sitting almost halfway back. So let me ask the crowd now, if you believe this rally was for real in the dollar during August and September, and it was pretty impressive, Euro went from 145 to 131.5, big moves, right? So if the market's pulling back, what should we be looking to do now? What do you want to do with a chart like that? Sell it, buy it? Mike wants to sell the dollar. Okay. Did you want to sell it up here, Mike? Do you believe that the dollar is going to make new lows here? You do? You think they're going to take these lows up? Okay. You could be right. You know why? Because everything and anything can happen in markets. I think we hold between here and the 76 level, and I think it's going to be closer to here. Right in the 77 ballpark, outside shot of 76. It's possible. But I'm starting to look at the long side of the dollar now. So the other parallel asset class that was behind this was what? What turned the dollar? Anyone know? Besides news flow? Okay. So we had the low in the S&Ps on the same day on Tuesday. Correct? Everyone see the S&P chart? Or do I have to refresh? You can see that? Frank, you see the S&Ps? Okay. So we've had this bounce in the S&Ps, right? It's my contention that even if there's more left to the upside, it's time to correct the correction. Okay? So I'm looking for at least a pullback before it makes another attempt and maybe heads up towards 1250. And you can't rule out that this could be all of it. Just like you can't rule out that this 50% retracement in the dollar index isn't all you're going to get as far as a correction. I'm thinking there will be. There's nothing impressive about what it did today. But there was nothing impressive about this bottom either. Okay? Not all bottoms are dramatic with spikes and so forth. Tops are usually more dramatic. Bottoms could be more subtle. Okay, and the other shift in asset class, you guys know that have been here, I haven't been positive. Gold is still going down. But this is even more important, and it relates to the Japanese yen. This is an ETF called the TLT. It's the Barclays 20-year Treasury Index. And as this was going up, U.S. dollar yen was going down. To me, it looks like we put in a significant high, all kinds of divergence, and the bonds are in trouble. I think we put in a significant top here. I'm not saying they won't bounce. So what this is telling me, the message to me is the carry trade of the yen going up in value down on the USD JPY pair was mainly due to using the yen to finance the purchase of treasuries. It's called the carry trade. So if the trend is being broken, the uptrend being broken in bonds, you could start to look for the reverse action in U.S. dollar yen. And people here in the room today know I've been bearish, thinking we were going to get a washout to about the 74 handle. Yesterday's action changed my mind, and I'm now playing the long side of the yen, and this is the reason why. So let me ask you this. Does anyone in your FX education ever pointed out the relationship between the Treasury market and the Japanese yen? Yes? No? I'm just asking for one letter. Thanks, Scott. Do you understand this? Okay, Dan. Bill understood it. Okay? So it's something to pay attention to. Because correlation work is part of what I do, right? That correlation work. And you know, if you're a USD CAD trader, what market should you be following? Who in the room knows what you should be following if you trade USD CAD? What market? What outside market? That's right. Dan knows, Mike knows, these guys know. Okay. So that's it for the outside markets. Why don't we move to the pairs now and talk about if this correction in the dollar is about to run its course, what we may want to consider, what kind of market action we may want to consider in the coming days and weeks to take advantage of a renewed uptrend in the dollar. You guys want to do that? Okay, let me refresh. Okay, here's Euro GBP. I'm short this market, looking for a decent decline into this area right here. The reason I think that there's going to be a decent break in Euro is because of how this pair is acting. Because when Euro, here's a little bit more correlation work. I'll use the hourlies for now. While the Euro was advancing to make new highs yesterday, I'm dangerous without a mouse. This is the best Euro GBP could do. So in my eyes, that's a non-confirmation for the Euro rallying to new highs. Can you understand that when I'm looking at Euro rallying to new highs, normally this spread, when it's going up, this pairing when it's going up, the Euro is acting better than cable, right, than the British pound, which means the leader should be Euro. So at this high, on the 12th, intraday, Euro was making a new high, right here. But on the next rally, Euro was making a new high, while Euro GBP was putting in a failing rally. So that's a non-confirmation. That's one of the reasons I'm currently short Euro as well. Because of my bias, I'm probing it here. So this is the way I look at Euro here, at least for now. You know, if you do the right thing today, tomorrow will take care of itself. So initially, I'm not looking for new lows that we put in 2 weeks ago on Tuesday, the 131.45 level. But why can't this correction have a correction? So what I'm looking for now is some type of move, some type of retrace off this rally, which was one heck of a rally, right? We rallied very close to 700 pips from here to here. So for Euro to pull back to 135, 134 still doesn't completely negate this uptrend, right? So that's the kind of trade that I'm setting up for right now, because I do believe there's a chance before this rally is over. My ultimate target is 139.20, and I'll share with you why. What's this formation called? Come on, traders. What's this formation called? See it? Anyone know what you would call this? It's a classic formation. It's not. I'll give you a hint. It's not a triangle, and it's not a head and shoulders formation. I've taught this before here at FX Street. Rob, you know what this is. What do you call it? Okay. It's a falling wedge, right? And this is where the wedge begins, right here. And the definition of a wedge is once you break out of the wedge, which it did here. I'll get to this throw under in a bit. But once we broke out of this range, the ultimate objective is 100% retracement of where the wedge began. And that's right up there as 139.35 and a half. So that's my ultimate target. So we could pull back to the 134 level, 133 level, and then go up one more time towards that 139.20 level, maybe even push 140. That's the scenario I'm looking for going forward. Now let's just get a little more shorter term here. As you can tell, we're diverging here. We keep making new highs. Almost had a confirmation in the euro here. And then if you look at the 1 hour, guys, you're talking to a dollar bull. Have you figured it out by now? And I did catch some of this correction. So I thought there was a chance for maybe one more new high, and it is possible, but I want to have my toe in the water. So I got short in here yesterday. Thinking initially 35.80, and my target's open. I'll come up with fib targets down the road. But can you see the divergences? Here's your confirmed high, right? This is your highest rating on the hourly. I do a lot of work with this, okay? Then we had a little pullback, and we rallied to new highs, but it did not take out this RSI reading. So there's your first momentum divergence. Then we pulled back again, made higher highs, and diverged again, and have pulled off. So if we do make new highs, that's not going to scare me. That's a good sale to me too. And that's a possibility. But it's also possible that we've already topped and we're starting to round out and start heading down. I think that should we take this low out, 136.90, that would be a pretty good clue that we're on our way down. Any questions on the euro? Everyone kind of get the picture. What I'm looking for over the coming weeks is a pretty good retrace of this whole move down into this zone. At least correct the correction, which I view this whole thing as a correction. I mean, when you think about it, from 145 to 132 is 1,300 pips. I'm just using round numbers. And we rallied back not even halfway. So to me, this is a bear market rally in the euro. Can I get some wives in the room that you understand my take on this currency? Or if you have any questions, please don't be shy. I'd like to clarify it for you so that you walk away understanding what I was communicating to you today. Okay, I'll just move on. So we were talking about the bonds earlier, right? And this was the big day in the yen. To me, I believe that I'm starting to accumulate in here. I'm going to risk these lows. Maybe they'll fool me and we'll give up all the intervention. But I think that there's potential for a move back to above these highs. Why? Because we have a confirmed high right here, which implies there's probably another one coming. And as long as the bonds are under pressure, the demand for the yen diminishes. So the fundamental story was what I showed you with the TLT. And the technical story is we broke out of a triangle. First, I was short and looking for new lows. Okay, I'm wrong at times. And by the time I woke up here in the States, we had already negated the breakdown and we were breaking out. So the market pulled back almost to the triangle line. This was a descending triangle. So first they got the longs, now they got the shorts. Now we're going to see what it's made of. I'm working upon the contention that this 120 pip rally that we had in the yen will be repeated from somewhere in this zone. And if this is an A, B, C for B with a C to come, C's and 3's are normally a fib extension of A's or 1. So if this was a 120 pip rally, at the minimum this would be 120. It could be 1.618 and you're looking at the potential for a 200 pip rally at the end from higher lows. Any questions on that? I'm accumulating this one. Okay. We've had a very nice correction. I remember talking about it was bullish oil and that Canada might be the first risk aversion currency to really take it hard on the chin. It has. But we're approaching some pretty significant retracements. Now the dollar index has retraced 50% of its move. Canada hasn't. That would have to be 6 cents. That would take it down to $1, which is possible. But I'd be looking for breaks to buy here in USD CAD. I'd be surprised to see it closing back under these highs, previous highs. So be alert for reversal signals there. And yes, oil, if oil is going to really explode here, this is what I was talking about. Pay attention to the USD CAD and pay attention to oil, because when oil is going up, it usually pressures this, and when oil is going down, it's supportive to this currency. New traders, write that down. I'm telling you that's a pearl of wisdom if you like trading USD CAD, to pay attention to oil. USD yen, pay attention to the treasury market. Okay, what do you want to pay attention to if you trade the Aussie? Anyone know? What outside market does it most closely correlate to? A member asked me, he said, Dale, is the Aussie the leader or the follower? And my response was, well, it's the follower of the S&Ps and stock indexes, but it's the leader of the risk pairs. Because the correlation, if you trade Aussie, it would pay to have a screen and watch what the market is doing, what the Dow and the S&Ps are doing, because it has a very tight correlation now. It's a risk on, risk off trade. So when the market is up, it usually outperforms euro and the British pound to the upside. And when equities are in trouble, its losses in percentage terms are greater than euro or Aussie. And we broke from 111 to 93.5 in the Aussie, and then recovered close to 9-10 cents already. So if you like trading S&Ps, but you're in the FX world, Aussie's your pair. Just quickly, looking at the Swiss here, most likely some kind of recovery coming here, but I'm not impressed with it because we have no knock confirmations here. So to wrap it up, I like to wrap things up this way. If you learned anything new today, this will crystallize it for you. Or something became clear to you that was fuzzy before, give me a Y for yes, and tell me what it was. Is my volume on? Okay. Then here, just one more thing. What is your most valuable currency? Matthias, what's your most valuable currency there at FX Street? Rob, what's yours? Okay, your most valuable currency is time. So I want to thank you guys. Money comes and goes. Tips come and go. Time is gone forever. Thank you for spending your precious currency with me, your time today. I hope that there was something new offered to you, different way to look at the markets, a few little techniques that you've learned. If you're interested in being mentored by me and some other very credible and capable traders, you can find us at yourtradingroom.com. So good hunting to everybody, and thank you, Matthias, for facilitating this, and Adinda for recording it.